Welcome to the Accounting Arc Podcast, where analysis, reaction, and comedy collide to tackle the big topics from the world of accounting and beyond. Join our trio of transformation agents as they discuss the hottest topics in and out of the profession, from breaking down industry trends, to reacting to everyday events, to uncovering the hidden humor in numbers. With wisdom, insight, and a dash of levity, they're proving that accounting isn't just about the numbers. It's about life. Because after all, accounting is in everything. The Accounting Arc Podcast starts now.
Welcome back to another episode of ARC. Today we're digging into a topic that we touched on in another episode around CPA firm ownership. And so to set the stage, we were talking a bit about the implications of having CPAs own CPA firms and the requirements around that, alternative business structures, and the implications of what's happening in our industry right now with private equity. And to begin, I think it's important to look back at the history and understand where we came from and where we're going, right? And so the first law around CPA licensure was in 1896 in New York. And funnily enough, it was passed on April 17th, 1896, which I think is a really interesting date for accountants in general. But that was the first state to require individual licensure. And at that time, it was to protect the public, right? And there are a bunch of implications around that. But at that time, almost all CPAs were acting as individual sole proprietorships or very, very small firms. And so there was no requirement for firm registration and this was all state by state. And so those rules evolved between the 1940s and the 1960s for the most part. And then there was even more standardization that came in the 80s and 90s around what those rules should look like. And then the evolution of, the UAA came in the, early 2000s, and we had more states being consistent. And so, I think the history of it is we had individuals being licensed and regulated, and then it became realized that we needed these bigger firms to be licensed and regulated and owned by CPAs, which is what started happening in the middle of the 1900s. And then we move on to how that has evolved and where we're going. So first off, what are you guys' thoughts about the history, and which part of it is most interesting to you?
I mean, I think it's really interesting to even understand how restrictive those rules were with respect to the licensing. I'm curious if you have any insights on as things were evolving, what the rules were between even operating as a CPA firm and as an accounting firm, non-CPA firm. Do you know, was that even part of the discussion back then, or was everything in accounting a CPA
I'm sure Liz
firm?
is looking it up. So while she's looking it up, I think we can address some things there. So part of it that we need to remember too, that a lot of times the word accounting is synonymous with CPA in the regulation. So if I remember correctly, most of the states also don't allow you to say you're an accountant unless you're a CPA. And then so you can't actually say that you're an accounting firm and not be a CPA firm, if I remember correctly as well. So there's an interesting tie there in the use of the word accounting. The other thing I think for context too, and Liz mentioned it when she mentioned the individual license, but it comes back to this whole the protection of the public interest, which is then the duty of the firm. And the primary thing we normally see the firm designation associated with is the ability to perform audit services. So that usually is it. I can't remember, and I don't remember any specific things related to tax. I know CPA carries something with relation to tax and the ability to represent in front of the IRS, and you kind of automatically get granted that and a bunch of other things. I do recall as well, as a CPA firm, that we also get certain exemptions from things, just as law firms and other professional practices do, because we're already regulated and there's requirements like I think beneficial ownership, we had an exception to that to those reporting requirements because we're already registered and owners are already registered with the various state agencies.
Yeah, so I think it's really interesting that we had this shift, right? So we had individual CPA registration required, and those individual CPAs were the ones that were allowed to sign audits or do any of this work. And because it was an individual registration that had nothing to do with a firm, you could use your CPA regardless, right? And so this goes back to the conversation we were having the other day around the usage of CPA and how it's being restricted because of firm ownership and firm registration requirements, right? And so I think that that distinction, when the state started requiring firm registration, and that was 40s, 50s, 60s, and then we get into like the 1970s and 80s, and firms start or state boards start saying, oh well, if you're not working for a registered CPA firm, then you can't put your CPA out there in the same way. And that started getting widespread adoption in the 90s and the early 2000s across the states. And that's when I think this shift of utilizing your CPA was taken away from the individual who worked so hard to get that licensure and pushed to where you're working and what you're doing at that level. And that's where I think most of these laws around the ownership of those firms came from, saying, okay, well, you can be a CPA firm if you're owned majority by CPAs. With that idea, Donny, like you said, for the protection of the public interest, right? So the reason we're registered at all is because we need the public to understand that we know what we're doing in these matters, and we're not going to create situations that allow you to, I guess, have financial issues, right? We're here for help in that matter, versus anyone who doesn't have the education background or knowledge to be able to provide these services in a meaningful way. And then also trust and audit reports is the
Thank you.
biggest thing, right?
I was like, you're missing the most important part. It's actually
Yeah.
it's that trust piece, right? Which
Mhm.
is always why we come back to part of what we do. And funny enough, just literally just this morning, I actually had to send an email to a client because about this whole duty to the client and duty to the public. The fact that even I have to put the client's interests above my own, and in the case we're describing, the public's interest above our own, above the firm's interest, in as the case may be, in actually determining that the client is providing information to the public that the public can rely upon.
Well, and it's also interesting and worth noting that it wasn't even until the 90s that they even allowed any non-CPA ownership in CPA firms. It was the 90s when that changed. Prior to that, it had to be 100% CPAs who owned the firms. And it was even into the early 2000s before pretty much every state changed those requirements that allowed even a portion of non-CPA ownership.
Well, not all states. Hawaii's one of the
I
ones. Still, we still can't
I
have
think
non-CPA
possibly
ownership.
the only one.
Are
In
we still
fact,
only one?
I think you're the only one. Yeah. Um, but yeah, so it's kind of interesting to even think about like through that progression of all those things, this idea that it had to be 100% ownership 100% CPAs in the ownership of CPA firms, which really, if you think about the history of people becoming CPAs, in a way, that was one of the additional benefits of becoming a CPA is you could then become a partner in a firm.
Right. And so like I wish I could be a fly on the wall in those conversations, right? And even the first registration of firms, like I wish I could understand, back in the 40s and 50s when those first laws were being passed about firm registration, what the conversation was, right? Like were they talking about the public interest? Were they talking about protecting CPAs? Were they talking about, just getting more fees for registrations? Like, I don't know what
Right.
the conversation was at that point, and I wish I could have been there to experience it. Um,
Or
do you
what
have
was the
thoughts?
event that happened? Like maybe there was a major failure and they were like, oh, we need firms to actually be licensed. And so like, maybe there was not to the certain degree, but an Enron of the 40s that led to this idea of having to have firm registrations. You're right. It would be interesting to know what inspired those
Right. And
changes.
this is where I miss my grandfather. I used to call him and ask him all these questions because he was a CPA. And would give me the history and the interesting things that were happening at that time and the context. So, if anyone listening actually knows the context of when those laws were passed and why, I would love you to reach out and maybe we could have a conversation with you about it. But I do know that the structures of accounting firms and the Uniform Accountancy Act that most states um, at least considered in pushing for the regulations changed it to that 51% ownership because of the difficulty in the types of services that were being performed. It was no longer just, audit and a test happening at these very small CPA firms. There were tons of other services that, you could still have a partner who was very good at what they did. They were a wonderful consultant and not have their CPA designation and want to give them ownership in the firm because of the way the firm dynamics worked. And so I understand the logic there. And I appreciate that it was still majority CPA owned because of what Donny was saying and the commitment to the public and ensuring that we as CPAs are, abiding by the rules and the ethical standards that we've agreed to get this licensure, right? And if you take that away, that's where I have a problem, right? Is if we start going to the point where CPAs no longer have to own CPA firms, then firms no longer have to stand up to these ethical guidelines and can be focused on the fiduciary responsibility of generating profit for investors or for private equity or for whoever owns the company versus focused on what is best for the clients and what is best for the public interest. And so I am hoping that these alternative business structures don't go further than allowing 49%. But what do you guys think?
I think we have a major challenge in the sense that from the general public's perspective, and we touched on this in that previous episode, the general public's perspective or understanding is very limited in the nuance between what is a CPA firm and what is an accounting firm. And I think we have a really messy degree of ambiguity in the sense that having it, there are so many non-CPA accounting firms that aren't licensed, that aren't limited by these rules and regulations that are operating from the general public's perspective as a CPA firm. So I think we need to take a really serious look at that and figure out what to do to create clarity for the general public in these distinctions, either through limitations of some sort or some other way to be able to compete to make these distinctions clear. I don't know what that answer is, but I think we have a mess on our hands already because of it.
I think that comment ties well back to our discussion around just the use of the CPA designation. Also, funny enough, I'm looking at the way some of these, especially the PE-backed alternative practice structures are playing out, and I feel like actually it's going back to, I think it was around 2011 or 2012 when I first saw the round of changes coming through on a lot of this, and I was like, well, actually, I think the future firm is audit is by itself and everybody else does everything else because audit is the only thing is like that's actually licensed technically at the firm level. But going back also to Liz's earlier point on the education and I think it's not just education, but it's professional standards. So the other thing that differentiates the audit practices is, and again, this is most states. It's written into the Uniform Accountancy Act, but not all states have adopted this requirement, is the requirement to be peer reviewed. So the peer review requirement, which actually came in 1988 in the AICPA's version of the UAA, required that auditing firms or firms providing audit and attest services become peer reviewed. and participate in the AI CPA managed national level peer review program. So it is standardized at the national level. It's executed at the state level. And I know there's now previously each state would do its own peer review. I know there's regional service centers now that are run by particular states. So there's an infrastructure, operating infrastructure there that is sort of parallel to the regulatory structure, because this is voluntary, the profession volunteering or the industry
Right.
volunteering itself rather than the regulators running it. We run it ourselves as the profession. So I think that's an interesting nuance. But that makes sure that firms are following the proper auditing standards and that they are ensuring that their people are competent that are working on it.
Well, and that's an interesting point, Donnie, because for many years after peer review was implemented, we were one of the few professions who had self-regulation. We kind of did that to actually get ahead of any type of government body coming in to regulate the profession. And, unfortunately, there was a series of major incidents that then brought the government's eye into that self-regulation, which is now why we have the PCAOB, at least for now, for publicly traded companies, where they've actually extracted that profession self-regulation away from the profession, and put it under a government regulatory body. So, it's been really interesting to see how that has evolved, but that we have been able to maintain that self-regulation for private companies and nonprofits.
Yeah, no, I think it's really interesting, but also like let's get back to why are CPA firms unique, right? And I do agree with you, Donnie, based on like the current regulations. Audit firms are really the regulated body. But at the same time, do we agree with that? Because I think anytime you are providing this type of service, whether it be advisory, like even if I'm doing a due diligence
Yeah.
project for someone, I'm not issuing a quality of earnings report. I'm looking at this stuff with the same eye an auditor would, but I'm not doing the statistical testing. I'm not doing the documentation in the way that the regulations require to sign that, but I'm giving an investor an opinion, right?
Yeah.
And it's very much disclosed that this is a consulting engagement. This is not audit services. We are not like attesting to anything. We're not whatever giving assurance, but we are at the same time doing the work that we have been trained to do as CPAs. And so I go back to most consulting requires a higher level of ethics and requires the insight that we're trained to do through the CPA licensure, even if we're not issuing an official signed report the way that you do in an audit or even agreed upon procedures situation, right? And so I bring that up as an example because I don't think that we should have all these firms broken up into like different service lines and put people who are not CPAs in charge of that work when they don't necessarily have the background or the ethical requirements or the I don't know what like the I don't know the right word for it, but that extra je ne sais quoi, right? Like that people need to be able to like do this work in the best manner and give the people like what they deserve, right? And so I personally don't agree that audit services are the only service line that should be under a CPA firm.
I absolutely agree with that. Think about the number of loans that are financed based on QuickBooks reports that were generated by anybody who has a user license to sign into QuickBooks and like type away a bunch of things, may or may not be accurate, print the report and send it to the bank, and the bank's on it. In fact, a lot of times the banks will say, "Did your accountant generate this?" As if that's a stamp of approval that that information is accurate. I unequivocally agree that there definitely needs to be some rules, at least with respect to any financial reports that are being provided to third parties from any, that they should only be from CPAs.
I agree with you. I want to take us away from that topic because that's going to get into differing levels of assurance, which is probably a whole nother podcast.
That's fair.
I'm going to come back to Liz's one, which I wholly agree with. My firm is an advisory-only firm. We are registered as a CPA firm to demonstrate our commitment to the higher level of ethics and standards of practice, and also so that we can put CPA on our business cards and everything, as we discussed in the other episode. But I'm going to devil's advocate with the other argument that I hear. So usually the other argument that I hear is, well, that creates a higher operational cost because now you have to do all these additional things to make sure that you are upholding the standard and be able to prove that you're upholding the standard, because we actually hear this argument in the audit side as well by those that are doing a test-like engagements. And a lot of this we see in ESG and sustainability and all this stuff, right? Where they say, well, all we have to do is hold other people to the same standard that we have as they're delivering consulting or advisory services, and that will level the playing field. But until we have that level playing field, we're at a disadvantage if we have to comply and do all this other stuff. That's the argument I usually hear against having everyone do that.
Yeah, and I think there has been evolution in the rules, at least with respect to CPA firms, to allow the issuing of financial statements that have all of those additional things on top of what a CPA is already performing would not be required. So I think we have started to move that way. For example, for CAS practices that are within an accounting firm, they're now able to issue, they still have to put a report on it, but they don't have to do all of the additional steps required for financial statements. So, I do understand that, but I also think, having a better data integrity with the financial information that is being provided to third parties and banks and everything else is important. So somebody should pay for that, for them to be accurate. Might be less issues down the line.
Yeah, I don't disagree with that. And also, the same reason Donny is registered as a CPA firm, we are as well. And I do think it's important for what we do. And I think that it gives our team, and quite frankly, it gives us access to, some more of the like small firm resources with the AICPA and some other like really good supportive, I guess like not just templates, but like processes and understanding and peers that we can talk to. And we are not subject to peer review because we don't do any audits. But at the same time, like I would welcome that. I'd welcome somebody to come into the firm and look at how we're doing things and what we're doing and make sure that we are abiding by the right standards and ethics that we should. And, I think it is important to get to the point where we have we have a CPA mattering more than just regulation and outside of just insurance, right? And so this is an argument I hear a lot is, well, insurance is more expensive if you're a registered CPA firm. And it is. Like for the last time I quoted it, it was almost twice as much because of the professional liability and the concerns that people have if you're putting yourself out there as a CPA firm. So that's an issue. And then, another piece of it is not technically required for a lot of the stuff we do anymore, even though I think it should be.
In today's world, cyber threats don't just target big businesses. They target you. Your small office or home office is at risk.
There are a lot of solutions out there. Not all of them have the same level of security. The Soho Protection Package is designed to provide proactive cybersecurity solutions.
If your firm is looking for assistance in developing your personalized IT policy, connect with an advisor today at link.improvetheworld.net/Soho Cyber. Gain peace of mind that you have the right technology in place to stay protected.
And that's, hard because it does create barriers to entry in an industry. But like the damage I have seen done to companies by accountants that are not trained properly and are not required to uphold ethical standards, the amount of fraud I have seen with very little downside to the people, because it's very, very hard to prosecute fraud. You have to have a lot of documentation. And, the amount of misrepresented financial statements I've seen go to banks where it ends up hurting the business owner and it doesn't know any better. They trusted bookkeeper X to do whatever. It was all sent to the bank. They put their house on the line based on these financials with the assumption that it wouldn't be an issue to pay it back. And all of a sudden, the business has no cash flow. And they can't pay the loan back, and now their lien on the house is being called, and they're required to like sell their home to pay off business loans and get out of debt. And it's really sad to see that happen to people, and that is why I always advocate for the CPA. And so I know I say in jest, like, why do I have this, right? Like, I'm not doing anything that requires a CPA license, but at the same time, like foundationally, I am, because of the way that we're advising clients and the way we're working with them. And I think it's important for them to know that we're putting their interests above all else, right? And then I would say like my secondary piece of this is that having CPAs owning CPA firms gives more, I would guess, like, I'm having trouble with words today, guys. I feel like I can think of them in other languages, but not in English. Probably because I'm leaving for Europe, so my brain's already like gone, right? But yeah, so I think it's that feeling of security and that understanding that we are foundationally responsible to the public versus responsible to profits.
Definitely. I think kind of my takeaways on this, we've definitely affirmed the need for firms to recognize the designation, to be designated also as accounting firms. And the gap that I think we kept coming back to is the public. Even though we're here to protect the public doesn't differentiate between us and any other consulting firm. And that maybe is the issue to actually be solved, is the education of the public, or even tying back to some of what Byron was saying, it's not really the public, it's the actual user of the financial statement, which is most likely not your general public person. So when I hear this stuff like, oh, the firm is required to be licensed, or even the individual is required to be licensed for the protection of the public, it's like, okay, yes, maybe we have that, but the education and the person that's using it is normally not the general public. It's a banker, it's an investor, it's an analyst, it's somebody. So that's where that education piece needs to come through. And maybe we need to rethink whether the public is really the endpoint consumer, or whether there's a different endpoint consumer and a different way to form the regulations to protect the public.
Yeah, and I think your point is right on, Donnie. It's not that we need to educate every human being in the world on the distinction. We need to educate the gatekeepers within the everything, and like the banks being one of the easiest ones to identify, because they frankly don't know, usually don't have an understanding, don't make a distinction whatsoever. So, I think we could probably make a lot of progress with focus education to the right user groups.
I talked to a banker a couple weeks ago about quality of earnings reports, and they didn't know that that was an assurance
Of course not.
like report, right? They were like, oh, like any CPA should be able to just like look at this. I'm like, yeah, I can look at it. But we don't sign assurance reports, so I'm not going to like sign off on it for the bank. And he was like, well, that should be fine. I'm like, no, there's like a big difference between these two things. And so even like really good quality people in financial services and banking don't necessarily understand what we do or how that works. And I think that that is also a foundational problem, to your point, Byron. And then, beyond just education, I think that there needs to be almost like a revamp of what CPA is and why we exist. I think there were very clear reasons why this became important with banking crises, with economic collapses, with well, clearly, our profession, unfortunately, in the early 2000s, perpetrated a giant fraud, which caused a lot of extra regulations and other things, which is awful. And it was, a handful of people versus the entire profession. And
Like,
it
yeah, please
tarnished.
correct that. It wasn't the profession that committed it. It was a handful
No,
of people,
no.
but it reflected on the profession. I would
Yes.
agree. Yes.
That's what I'm saying is like it reflected on the profession in a really bad way. And that's awful. And I think we've been recovering from that ever since. And then also I think that the, nature of what we do or how we do it has changed. And people are not keeping up with what that means. And I do hope that accessibility to get a CPA license is increased because I think that it's important. Um, because if it is so exclusive and difficult to get, you will have more people not doing it and not actually going through the process of learning and being forced to continue professional education and understanding ethics every year. And I don't think the general public understands how much training we have about ethics and the requirements that each state has around that.
Well, you actually raised this last one. You actually raised an interesting point, and although this is sort of a shift back to individual licensure, there has also been in the past floated around the ideas of additional licensure below CPA, like a certified bookkeeper, right? So that there is a lower level, because I don't know if it's so much reduce the requirements to become a CPA so much as we now have other requirements that, or we have other use cases that maybe someone doesn't need to be full CPA. And the other example I'll use is in tax. You've got your CPAs and you've got EAs. EAs
Mhm.
serve a different purpose. They primarily focus on individual usually. And so you've got someone there compared to the CPA that is really looking at multi-entity, corporate, other types of transaction optimization, that types of things. So having different levels of certified people or different types, maybe better types of certified people, or recognizing, because if I were to broaden that even further, I could go, if a CMA were to have prepared the financials, would I consider that the equivalent of a CPA internally having provided that financials? Because either side, there's not um, independence required. There is objectivity, I believe, also under the CMA, and I know the CMA has an ethics requirement within theirs as well.
I think it needs to be part of the discussion for sure. I think there's a lot of moving parts, and when even thinking about it, it does like yes, and could that potentially lead to even more confusion for the general public if there's all these different tiers and different options and like so I think there's a lot of factors, but I do think the spaghetti needs to be cleaned up because it's creating a lot of challenge. And Liz, to your point earlier about, the the difficulty of achievement has to be um, the benefits of achieving it have to outweigh the effort and energy putting into it. And I think right now that that's also not clear. I mean, those of us who've been in the profession long enough understand the distinction and the differences. But when you are, evaluating, do I get my CPA or do I choose the EA route or do I choose none? It is really difficult for individuals who have not worked in the profession for a long time to even understand the benefits because the checklist of benefits of being a CPA is the ability to sign a CPA, sign an audit report, and then Donnie, you mentioned earlier, there's some benefits that the IRS allows just simply in achieving the CPA. But beyond that, on the brochure, it's really hard to tangibilize for people evaluating.
I think that's why we need to get back to like real apprenticeship as part
Yes.
of education. I think that that is the only way to really understand the profession in any meaningful way. And our quote unquote internship programs do a disservice to the kids in them at this point because most of them are superfluous. Small firms are basically turning them into admins, and large firms are creating these like, oh, this is the ideal place to work situation where you have 3 months of being like pampered and getting free drinks, and then all of a
Recruited,
sudden,
correct.
like, yeah, it's a complete recruiting mechanism, marketing scheme
Yep.
versus like an actual experiential learning. And that I think is a disservice to the people coming into the profession, which is why we have always offered like a real internship, where you are an apprentice, like you are doing the accounting, you are sitting in the meetings, you are learning the things and understanding our processes. You're not just getting coffee or doing filing, or, you know, and some of that does happen, right? But not to that extreme. It's the stuff that our normal accountants would do, right?
And
And
here we design our internships the same way. Like they're part of the team, they're doing the work that a staff would have done. They're just getting a little more mentoring and coaching than a typical
Yeah.
staff would get.
And given
and
opportunities to ask questions like this, right? And be like, hey, like, does this make sense for me? Like, am I enjoying this? And you know, what is the implication of it? What does it mean? And why do we care that we're a registered CPA firm? Like, does that even matter? And the answer is yes. And also it gives them the opportunity to experience that and feel it. But I do think that you raised a really interesting point, both of you did, around like what are the licensure levels? What should be the licensure? Like, where should people focus, and how do you even come to those conclusions? And beyond experiential learning, which I do think is the primary way that you figure that out, um, we, I think, as a profession, have become so hyper focused on what does this mean and who can own what and what is the specifics around signing things and other, and it has taken away from the overall reason, right? Like Byron, you're talking about a list of like, okay, here's all the benefits of being a CPA. Well, that's not inclusive. Like that's just what you're
right.
allowed to do because you have this license, or I should say, what you can't do without the license, right?
Sure. Yeah.
And it's a very restrictive thing because of the litigious society that we live in, I think primarily, which is a disservice overall. But what if we had, so like, let's pose this question. What if we have all these different levels of CPA that might be, you know, slightly different than the CMA CPA distinction we have today, but we have, like, some states have different levels of CPA licensure as well. What does that mean for ownership of CPA firms? Like, does that mean attest firms can only be owned by CPAs that have a test on their license? Does it mean that consulting firms can only be owned by management accountants? Or like, what does that do? What do we do with that?
It's a great can of worms for another episode. I've been in some of those discussions. That's why I say like that's probably a whole another episode because
Yeah.
there have been some of that. I gotta go back and find out who else was in those. Maybe we can get a guest on to talk through that.
That'd be fun.
Yeah. I mean, I'd
That
love
would
to
be fun.
understand the implications and the logic and how people are thinking about this moving forward, because what we have right now is a system that was set up not for the environment that we live in today, right? And so the whole spark of this conversation was, okay, we have PE firms buying practices, creating these alternative business practices, telling people they can't use their CPA designation on their email or their cards in places that they have individually earned this and should be allowed to. And then we come back to, what are these alternative business like structures doing, and how do we think about this in a way to protect not only the profession but the public and the individuals with CPA licenses and the firms overall, like the whole gambit? How do we think about this from the most useful way? And the spark of that conversation goes into, how do we evolve what we're doing today to benefit all of these parties and ensure that the CPA designation doesn't get lost in the fold and become just a, you know, cliff note. Oh, you have to have that to sign the report. So now we have, you know, a certain number of people that have it to sign reports, and that's it. It doesn't matter in ownership. It doesn't matter in anything else. And that is a huge disservice to the public and to the profession. And that's where we're headed right now. So how do we stop that?
Without a doubt. Well, and you know, one of the things that we are beginning to see that will help, and you touched on it, is we are starting to see real actual apprenticeship programs show up in the states that are part of the alternative pathways to licensure, where you really go into a firm and you work side by side and get true experience. Unlike my internship was awful. Like I mean, we talked about it, in prior episodes, the antics of my internship, and it didn't. Fortunately, I already had my eyes set on achieving the CPA, but that did not give me the experience that it should have. And so now that we're starting to see some states in conjunction with colleges be able to offer true apprenticeship programs, I'm really excited to see how that's going to benefit the profession.
I am too. Also, I think like other professions help subsidize those types of apprenticeships at the like board level, at the like membership level. Like there are incentives for people to take on apprentices or interns, right? Our profession does not subsidize that at all. So it's, some schools will give kids credit and some states allow for free interns, but quite frankly, and I totally understand this, if you're 21 or 22 years old and you're going into a program where you're not getting paid and you're having to do this and you're just getting school credit, it's like skate by, do the bare minimum, right? And that unfortunately is not good for anyone. And so I do think that we need, along with updated regulations and updated structures, kind of thoughts around how do we subsidize these apprenticeships to make them more pervasive and more impactful to these kids that are coming into the profession, and help solve this gap that we have coming of not enough talent and people thinking that everyone in accounting is old and gray and crotchety and writing things on paper with their green visors and smoking cigarettes in the office. Like, it's just not reality.
Well, we have definitely explored this on all different ends and a bunch of different angles. So all of you listening, we welcome your comments. Come let us know what you think, and maybe we'll do another episode where we explore this some more. So thanks, everyone. See you later.
Thank you.
Okay.
The Center for Accounting Transformation provides business professionals with a network for utilizing innovations that are ready for adoption, the training and resources necessary to apply those innovations, and an opportunity to engage the talent and community needed to further the pursuit of innovative accounting practices that drive responsible and mindful business performance. Find out more at our website, www.improvetheworld.net. And if you're interested in sharing your own transformation stories, please contact us there.